Hello friends, welcome to my channel and thanks for watching this video. Friends, as we have ended with one more Friday, so this is the perfect time to reanalyze, rejuvenate ourselves and look what has happened in the last week and also see what will probably happen in the upcoming week. But this week which has ended is not a normal week because this is not the end of this trading week, neither the end of this trading month. It is the end of the calendar year 2022, and from next week onward we will officially trade into calendar year 2023. So wish you all a very happy new year, a very prosperous new year, and I wish and pray for your health, wealth, success and prosperity. So with this, do not miss this session because I will explain very important things in this particular video, where I am going to explain the entire 2022 and what one can expect in 2023 onwards, and we will get a brief idea about the things which we have missed, because sometimes when we are on our journey we missed lots of things. So we need to rewind ourselves, we need to relook what has happened and what actually have we missed, and which will make us understand things very well. So with this, let's analyze what has happened in the last 1 week, what are the news that has driven the market, and then we will move to the charts where we are going to watch what are the important things that has happened in 2022 and the levels which we are going to look in 2023. So let's start this USA weekly market report, or the last USA weekly market report for the calendar year 2022. So let's start. Number 1, China December manufacturing contract at the sharpest pace in almost 3 years. Now this is something which is now hurting China, not showing your proper data, because uncertainty is something which stock market or financial market does not like. When you are in a good shape and you are hiding your data, that's fine, market will go through it. But when you are in a bad shape and you keep on hiding data, you will make yourself into a much more troublesome situation compared to other one, and it's going to linger on for a while, as far as China is concerned, because if they don't treat themselves well, nobody else does. So this is something which we are going to look at. Then we have stock market fall to end Wall Street's worst year since 2008. I don't want to compare this with 2008, but yes, there is a huge fall, and if you're looking at the overall chart for the last 12 months, you will see there are certain bad things which has happened, because the overall trend is on the downside. So that's what I can say over here. Apart from that, Solana slide accelerate, $50 billion in value wiped out from the cryptocurrency in 2022. I mean, if you have watched my videos on cryptocurrency, I have been telling this for the last couple of months, or I would say from the first half of 2022, that please be aware. And I have explained how they are going to wiped out by -60, -70%, and it has actually happened, and it is still happening. I mean, I don't know why people don't listen, and views are also less. So there is no such complaints that why I am getting less views, and if I am providing valuable information or valuable education to the people, and if I am able to save money for some people, not for all, because it depends upon to whom the information reached. So if there is less number of people, I don't mind, but at least I hope that some of my views make people save their money. So that's what my achievement is, and I've been saying that. And understand this, I treat this cryptocurrency basket as another financial instrument. Like we have stock, we have treasury, we have bond, we have gold, we have other commodities, we have real estate. So one more has added, and it is a ship which has not sailed properly. Okay, this is a very new ship, so we want ship, we know the ship which which has gone through tough times and which has seen the sea widespread. So that's where you need to focus on. Okay, it may come back, nobody knows when, but right now this financial instrument is not working well, and interest rate always works as a gravity. We have seen what will be the worst for real estate, what will be the worst for stock, for bonds, but we haven't seen what will be the worst for cryptocurrency, and that is yet to be seen. Okay, so it may be a trailer, it may be a half of the picture, or half of the movie, but the full movie is yet to be seen. That's what I can say over here. The Fed won't be what drives market in 2022. I mean, beyond a certain point, market will adjust itself. Nobody will be in control, because it's all about how big investors or people who are putting in or putting out billions and trillions of dollars, they are the one who will decide the move. Apart from that, let us see what's happening, because next calendar year will be very important in terms of geopolitics, in terms of money movement, in terms of interest rate. So you will see a big impact, because whatever has happened in calendar year 2022 as far as interest rate is concerned, you will get a full-fledged impact in 2022. So it's a lag impact, and that's why these are lagging indicators. What has happened in 2022, you will see the impact in 2023. So you will see big contractions which is about to happen, or maybe already started in some places, but a full swing or a full visualization you will get in 2023. Apart from that, European stock log worst year since 2018 as interest rate hike. Now, those who don't know, they must remember the period of 2012 and 13, and European stock market were in a troublesome time because of currency crisis and other things. And from when we have started 2001, and then for 7 years it was good, and after 2008, European economy is one of those economy which has hit very badly, and it was unable to recover since then. Okay, whatever they have done, that's a different thing, but as far as their economic situation is concerned, their roots actually got shaken very bad. That's a very visible thing that has happened. Apart from that, I think this is most of it, because we are in the winter season, or we are in the holiday season, so you won't get much of a news. So this is what we have over here. So let's start analyzing the market, and now let us see what will probably happen going forward, because this will be a full length video where I'm going to describe most of the things, not only with the perspective of what will happen in the next week, but what the 2002 was and what will be the impact on 2023. You will get a glimpse of it. But before that, if you haven't yet subscribed my channel, just hit on the subscription button. Also hit on the notification bell along with the all button to get my updated video notification. Number one, this is the Friday's close. Dow Jones closed down by 73 points. Actually, the volatility was much higher. It went down by 300 points as well in the intraday. Then it has recovered. And then NASDAQ was flat, 11 points down. It was also down by more than 1%. Then S&P 500 was flat. Gold at 1830. So gold is something which has actually performed quite a lot, and it is very stable. And because whenever we have seen uncertainty, big uncertainty in the market, gold and silver is something which one must look at. And then one interesting thing that is happening, oil has again started moving higher. So this is something which one must look at, because oil started moving higher. So if you can see a downside in dollar index, but at the same time oil started moving higher, that's not a good scenario. Okay, but there is a difference, there is a catch. In 2002 to 2007, oil started moving higher, but at the same time dollar was going down, but there was a growth factor. Right now the growth is also slowing down, the dollar is also moving down, but the oil is going higher. That is not an actual scenario there, but because there are certain permutations and combination which will work for the market, and we have seen there is a slight increase in the VIX as well. Apart from that, one thing is good, natural gas has fallen below 5.5, so that's a very interesting, and I would rather say a very positive thing that has happened. Then we have the treasury yields. 1 month yield 4.3, 3 month yield 4.44, 1 month yield 4%, for 3 month 4.3, 6 month 4.7, 1 year 4.7, 10 year 3.8, and 30 year 3.9. So I have been saying this thing for the last couple of months, that what the bond yield is, or bond yield curve, which we can see, you can type into Google, and I have shown it multiple times. It has already indicated an inverted yield curve, which means a recession in the economy. And don't mix and match it up with the stock market, but more or less the stock market is also moving on the downside, so it is showing some sort of some sort of correct scenario. Let me show it again, because so that you can understand what I have been saying. So an inverted yield curve, then we can see a stock market correction. So stock market is correcting, and as you can see, inverted yield curve, because the short end of the yield curve is higher than the long end of the yield curve. So the near term interest rate are higher than the long term interest rate, which means the uncertainty in the near term is much more as compared to the long term, and you can see a sharp correction that has started. And when we are looking at the chart, you can clearly see what has happened. Again, that's what I'm talking about. So bond yield or bond market has already indicated that. Now we have to see how far it can correlate, or how far it can go. As far as US dollar index is concerned, it is moving down, but at the same time, because growth is also falling and oil is moving up, so the permutation and combination is, so the mix and match is not right over here. If dollar index going down, growth and oil going up, that's a perfect combination where the stock market and other things started moving higher. But at the same time, when we don't have growth and the dollar is also falling down, but at the same time the oil is going up, so it is a completely opposite scenario. So that's not at all a good situation to look at. Now with this, let's come to the most important thing where we are going to analyze chart. Now let's start with the oil, because this is something which is going higher. So let us see what the chart of oil is telling you. Now this is the 1 year chart of oil. You can see this is the January at 77, and in December it has ended very near to I would say a very narrow range. So this is the narrow range in between which the oil has traded. So on the downside you have 77, and on the upside you have 85. So this is the range in between which the oil has traded for most of the year, because what we have seen is a big spike, then a big fall. So the year has started with 75, 77, and it has ended near or in between 75 and $80. That's what you can see. But this is a flat year, although we have seen some big and sharp rise where it went up to 129, 130. But look at the so this is the big chart for oil, and you will see what the chart is indicating. Okay, let us see what the chart is indicating, and then you will get to know what or how the chart of oil has been moving. So first of all, this was your previous resistance, which was I think, let me zoom this out. So if you are looking at the WTI crude, you can see 77 or 78 was your previous resistance, and now with all this volatility, WTI crude is still trading above 77.88. So it means it is respecting its previous resistance, which is now working as a support. And let me tell you, if the crude continues to sustain above 78, if it continues to sustain above 78, which means it is positive, which means it is definitely positive. And going forward, we then have again 94 and 124. So these are technical levels. This has nothing to do with demand and supply or all these things. If you think that oil is going to be negative, what I am going to look at simply the level which is in between 75 and 77. If it start trading below 75 or 74, then I will think that it now it is into a negative territory. If it continues to sustain above 78, it is in positive territory. So for 2023, the range will be 74 on the downside and 94 on the upside. And if by any chance it started trading above 95, it then again retest 120 and $125. So be very much aware, because the strength of oil is not yet is not gonna lost, and I would say it hasn't lost yet, because it is still holding very strong. So please have a look at it. Now what about the US bond yield? And I'm talking about the most important or the most looked out, which is the US 10-year yield. And you can see, even though we have seen some volatility, time and time again, okay, the RSI is also oversold. But if you are looking at the overall trend, there is no fatigue in the trend as of now, and the trend hits the lower end of the range and again started moving higher. So this is nowhere indicating any negative trend or the overall uptrend has ended. This is firmly, the US 10-year bond yield is firmly in an uptrend. This is what we can see as far as the trend is concerned. Let me draw the parallel lines and you will see what and how. So this is how the trend looks like, and now you can see how US 10-year yield has been moving in between a range. Okay, so this is very clear that US 10-year yield has been moving in between a range, and we are trading somewhere in the middle of the range. Okay, if you want, you may draw another line like this, another line like this, but at the same time, what we can see, understand the overall trend. And from 2022, if you are analyzing the moves in 2022, what we gonna see over here is the starting point, which is this one, okay, 1.6, and ending point is 3.8. so we don't calculate the percentage of percentage, but it has increased up by 142%. So there has been a big increase that has happened, and the trend does not look that it is going down. So what do we have here? We have 3.59 or 3.6 as far as immediate support, and we have 2.9, which is going to be a stop loss. So if you think that the US 10-year yield is going to fall down, it must break below 2.9, and if it continues to sustain above 3.6, the big swing that we are going to look at will be in between 6.5 and 7. I think this is a stretched one. I don't go with 6.5 and 7. This is a scenario. Okay, just consider this scenario as well. If the market gets the indication that the Fed is not going to hold on to the levels and it will not respect the market, it will only focus on the inflation control mechanism. So in that case, you will see 6.5 and 7.8 will be a reality. But as far as the current range is concerned, we have as you can see 3.6 on the downside as far as your stop loss, and the big range will be in between 5.5 and 5.6, which is a more reasonable move or reasonable levels that we are going to look at. So on the downside 3.6, and on the upside we have 5 and 5.6 that we are going to look at going forward. Okay, So this is what US 10-year yield is indicating. So which means and let me tell you, so last time when it has started moving higher, it has taken 81 days, okay, and now it has again started moving higher. So if I may consider 81 days, so if this trend works out, then by March we will enter in between 4.5 and 5% for a US 10-year yield. So this is something which you're gonna look at moving forward. Okay, so this is a very important data point which I am sharing it with you. If you can, make this thing work for you, I'll tell you, you are here for a big buck to make. If you don't understand, then obviously this is nothing new, because those who comes in market, most of them are new and they will lose money and gain experience, but those who are there in market, those who are experienced, they are very few. Anyways, let's move to see the dollar index. Now, on one side you can see dollar index has been falling down. On another side you can see the market is also falling down. Okay, so here is the situation where you cannot directly correlate the movement of dollar index compared to the stock market movement. Otherwise, if the stock market movement is supported by growth along with the falling dollar, then you can see a big increase in the stock market. But if the growth is not there, dollar index is falling, that does not mean anything, because there are different logics that will work out for the market. Now, as far as dollar index is concerned, this is the weekly chart. First, let us see how dollar index has indeed moved in 2022. So it has started with let me show it to you. So it has somewhere started near, here we are, okay, 96, and as far as the closing is concerned, it is still up by 7.37% in calendar year 22. It went up to 19% if you are looking at the start point and the high point, but closed at 7.5% higher. Okay, but if you're looking at the overall trend, what we can clearly see is a retracement, and the overall trend that we are going to look at for dollar index is, or the support lies in between 92 and 95, and on the upside we have a range in between 113 and 120.21. Now, there are lots of logic for that, why the dollar is moving like the way it is, but rather focusing on the logics, and I don't want to, because there are lots of things to cover. So we will stick with the levels, and that is easy to understand. That is what we can see, and that's what everybody can track. Okay, so this is what the dollar index is suggesting, and right now the market is so volatile that even if the dollar index going down, stock market may not move higher the way it should be, because the scenario is different. So let's put it that way. Now, starting with Dow Jones. Okay, let's go and see Dow Jones, the important indices, and let us see what has happened in the last 1 year. Okay, in the last 1 year you will see the trend. I like the trend for Dow Jones, because you can clearly see a big W pattern which is happening after a big correction. But if you are looking at the price action for Dow Jones, okay, so it has started somewhere near at the top 36,880. So this was the high of 2021, and at close it closed 10% down YOY, calendar year 10% down, but from the top to the bottom it has corrected by 22%, and even with the close it is still down by 10%, 10.2%. So the overall close is negative, although it is only down by 10%, but the overall close is negative. Now, what we need to focus on for Dow Jones, just focus on this specific level. Okay, you need not to do anything, and if you are not a pro, then avoid this level. and the level which I'm talking about is 32,640 on the downside and 34,300 on the upside. Don't try to do anything. If Dow Jones falls below 32,640 or let's say below 32,000, what we can see is a big slide will start again. Okay, and if you think of an upside, then wait for the Dow Jones to surpass 34,300. Don't trade this zone. Okay, because it may move higher, it may fall down, it may consolidate in between. There are lots of things which can happen in this particular range, and if you are an option trader, what you can see, your premium will go down substantially if you try to trade this range without understanding the pros and cons or without having a proper plan. So that's what I'm saying. If you are a retail guy, if you don't know how to trade the range, if you are not a pro, then obviously stay out of the Dow Jones price move. Focus on stocks, and I'm talking about good stocks, I'm not talking about crap. So this is what the Dow Jones is indicating. Don't trade the range for Dow Jones. Talking about the NASDAQ, and NASDAQ is something which will drive the market even lower, because as I've told you couple of minutes back, that whatever has happened as far as the interest rate hike is concerned in calendar year 2022, you will see the impact in 2023. Now, as far as the range is concerned, this is the range for NASDAQ. Okay, this is the range for NASDAQ, and NASDAQ has actually performed the worst. It is one of the high beta indices, across the globe. And if you are looking at the price performance of NASDAQ, what you're gonna see over here is something like this. So this is the high point, and it has literally closed at the lowest point of the year. So YOY it is closed down by minus 34%. So we have seen a 10% negative move in Dow Jones, but a 34% negative move in NASDAQ. And we have also seen how trillion-dollar market cap companies has fallen by 40, 50, 60%. So this is also a reality. Now looking at the NASDAQ, what we gonna do? I've been telling this, the trend is not at all positive. So if you are looking at the NASDAQ, what you need to focus on is 10,130. If 10,130 is gone for NASDAQ, the trend will open up for a range which will be in between 7,000 and 8,000. So that's what that's what the negative scenario is, and that's what I am thinking, that it's going to be a very likely scenario right now. Okay, so just focus on 10,130. This is the only one level to look at. And if NASDAQ has to go higher, then it must surpass and sustain above 11,850. Then we are going to talk about this level 13,200. But it is mandatory for the NASDAQ to surpass 11,850 or more. If it does not, then, and even if it touched 11,800, 900 and then falls back, it does not mean anything. What does mean is a big swing, and a swing towards 13,200 the least. Okay, but the most important thing is don't go below 10,130, otherwise a big downside. And when I'm talking about a downside, I'm talking about a further 20 to 30% downside move. Okay, so this is a very serious scenario which one must not ignore. Now this is the S&P 500, which is the most stable one, and I have been talking about S&P 500 because S&P 500 is giving you a very, very clear picture about the trend or the range. Okay, so the trend or the range for S&P 500 is giving you a very clear picture, and you can clearly see how S&P 500 has been moving and what are the levels that you're gonna look at over here. So for S&P 500, what we need to focus on is immediate basis on beg your pardon. So for an S&P 500, it is very important to secure 3770, because if it falls below that, we will definitely move towards 3500. And because there is a big big negative downside which is much more visible in NASDAQ below 3500, range in between 2800 and 3000 will open up for S&P 500. So this is something which we need to look at. And if you are looking at the price performance for S&P 500, so here we are. I think this is the top. So from the top it is down by 20% YOY in the calendar year 2022. And if you are looking for an upside, then wait for the S&P 500 to surpass and sustain above 4120 on the upside. Okay, although this is very near to a breakout zone, but the trend is not at all looking good, and it all depends upon what will be the next move by the Fed and Fed commentary. So the market is waiting for the Fed commentary for January 2023, and if the commentaries forget about the percentage move, they may hold their rates. But if the commentary sounds hawkish, you will see markets start factoring in things very quick and very sharp. So don't try to do things which you don't understand. Now I will let you show the most important thing, which is the VIX. Okay, because VIX is giving you a very interesting scenario, interesting picture. So this is the VIX price action. You can clearly see how the VIX has moved in the last 1 year, and basically you can clearly see a range. You can clearly see a range in between which the VIX has moved. Okay, so this is the range, and if you just follow the VIX, and those who have followed the VIX, they have actually get a clear picture about the move. Okay, so VIX has started with somewhere near, here we are, I think somewhere near 19.38, and it went up to 34-35, but close to close basis it is still up by 14%. Okay, from where it has started in January 2022. But if you are looking at the overall price range for VIX, what we're gonna have here is 19.27 and 18.56 on the downside, and on the upside we have 34.85 and we have 36.82. So this is what we're gonna see as far as the VIX is concerned. Now let's coincide, or let's correlate this with S&P 500. Okay, so if you are looking at the move, you can clearly see this is 3rd of or 1st of January, or yes, 1st of January or 3rd of January, where it was trading at 16, and then we have 24th of January 2022, and the VIX jumped by 122%. And if I may see the move in S&P 500 from 1st of January to 20, this is the 24th. Okay, you can see a move of minus 12% from the upside, and then from 24th of January to 2nd of February, you can see, or sorry, 9th of February, the VIX fallen by minus 6%. So simultaneously from 25th to this is the 9th, the S&P 500 jumped by 8 to 9%. So you can clearly see the correlation, how beautiful the correlation is. Let me show one or two more. You can see from the lows of August 12th to the highs of October 12th. Okay, the VIX moved up by 80%. So 12th, so here we are from August, yeah, this is October, beg your pardon, from this is somewhere October 12th to this is August, yeah, this is August 12th. You can see a move where the S&P down by 17%, and simultaneously from October 12th to Here we are, 2nd of December. So here we are from 12th or 13th of October to this is 2nd of December, somewhere near here. The S&P 500 went up by 15%. So you can clearly see a very beautiful correlation. So that's why it is very understand to understand the VIX, and you have to correlate it with the major indices. Now, right now, what the VIX is indicating. So there are two scenarios. First of all, because the VIX is trading at the lowest end of the range, and if the volatility increases, it may went up to or in between 34 and 36, okay, which was the range for the last 12 months the least, and it will create a negative impact on the S&P 500. The second scenario is if it falls below 18.5. So if the volatility index falls below 18.5, then you will see a negative start of a negative trend where it will turns a very positive scenario for the volatility index. So this is a two-way sword. You need to understand the move first before doing anything else in the market. So understand the move, you will get a much clear picture about the market. Now, the most important, last but never be the least, don't mess with gold. That's what I can say. And this is the perfect scenario where gold will definitely move higher. We have an uncertainty in the market. Okay, gold will move higher when dollar is falling down. But on a second thought, if market is uncertain, growth is not there, oil is moving higher, and dollar is moving down, then gold will move higher. And this is the scenario. I have been talking about gold since 1620, 1600, and I keep on saying that try to accumulate, and over a period of time you will get rewarded. It is still in between a range. I have talked about the big trend for range. Okay, I have talked about what will be the big possible target for gold, and let me tell you one thing, the gold nevertheless is on a right track, and sooner or later it will move, and it will move substantially higher. And if you're talking about the gold, what you must look at as far as the price action of gold is concerned is this specific levels. So once gold started trading above, it actually tried twice, but it has fallen down. But once gold started trading above 1930, you will see a big spike, because 1930 was the previous resistance, and if it started trading above 1930 and 1940, the big range will open up for gold. And once that happens, the big swing or the big target in the upcoming years, or the least that we can look at as far as the big target for gold is going to be, or it will be in between, here we have $2,700 and $3,400. So this is what we have here as far as far as the big trends are concerned, and I try to explain the most of it, the most important of all, which will impact the market. And this is not only in terms of what will probably happen next week, but how you gonna trade this market through 2023. What are the important levels, how to look at the market, how to interpret the market, and I have tried to explain on my behalf. If you do like this video, do share your thoughts in the comment section. Do let me know what do you think about the market, what are your views, and whether you have find this video valuable for you or not. So this is the end of the video. Thanks for watching.